An introduction to financial issues in acquisition agreements. Hello, my name's David Potts. I'm delighted to be able to be here to tell you a bit more about this Redcliffe live webinar, Financial Issues in Acquisition Agreements. This is a half-day training course that we run, and it is designed to look at all aspects of acquisition agreements, whatever side you're coming at it from, whether you are acting for the buyer of a company, whether you're acting for the vendors, in whatever capacity. By my background and training, I am an accountant, and will obviously look at such agreements with an accountant's view. This course is designed to really give you a much broader understanding about what all of the issues will be, and hopefully will help you get to the end of the process with a much more successful and hopefully a much more rewarding outcome for all those concerned. The course objectives are to provide you with a practical guide, and it will go through all of the main financial issues which are likely to be matters to resolve in the agreement. As I mentioned, my background is as an accountant, and what we found is that over the years, the people who've attended the course will often tell us that there is sometimes a bit of a disconnect. If you're a corporate lawyer, obviously you will be focused on what you need to do to make sure that you've got a properly drafted agreement, that it provides all the protection for your client, that there are not excessive demands being made from the other side. And a lot of the accounting and financial matters will be dealt with by the reporting accountant. This course is designed to give you just a much better insight as to what their concerns will be. And I think it is the case that if you are the accountants, you will be looking at this in terms of, have the records been properly prepared? Have the accounts that have been prepared provided a fair presentation, a true and fair view of all the business's activities, which are going to be absolutely central to getting the deal across the line successfully? And so the course is designed just to look at it from both sides. If you are an accountant as well, it might be that you're working within the organisation, and all of these demands are being made on you for extra information to meet deadlines, and all of it is a lot more critical because it's absolutely critical to this transaction being successful. So again, this is just to explain what is it that the lawyers are thinking about and what kind of information might you need. And even for the other advisors, maybe those coming from the kind of corporate finance side of things who've spotted the deal opportunity, they might be focused on just one or two aspects. You know, how much is the buying price? What kind of reward will this deliver? And maybe they've just focused on one measure like cash flow, or a profit measure like EBITDA. And that is all they're really looking about. The acquisition agreement is seen as, you know, just a legal formality to attend to. So what we normally cover over the course of the 3 hours, we will start by just looking at the first steps in any transaction. Normally the company will have some kind of track record. It will have produced accounts. These may or may not have been audited. We are happy to look on the course at all sizes and types of organisation, whether they're listed, whether they're private, whether they're owner managed. And we will look at what is the kind of historic information. We will look in a bit of detail, though, is in how that leads to the price to be agreed for the transaction, putting a value on the entity, putting a value on the shares. And then we'll look at what kind of role completion accounts play, why they are significant, but also how you've got to be careful not to let the completion accounts and what is called the completion mechanism, how to not let it get out of hand and completely dominate the transaction. I will also look at what are some of the most current topical accounting issues, whether it's dealing with leases, whether it's looking at reporting revenue, all of those areas where there will be the need for management judgment and estimates to be made, the kind of things which really do drive the kind of warranties which will be needed in the acquisition agreement. And then we go through the completion mechanism, step by step in a bit more detail. Debt-free, cash-free adjustments. What do they mean? What should you be looking out for? What is their purpose? Working capital adjustments. Why does this sometimes end up being such a problem in transactions? Maybe, again, getting out of control. We will then finish by looking at some of the alternative arrangements, which you might have to consider as well. I will mention lockbox agreements and how they compare to the kind of more traditional process. And we will look at deferred payments, contingent payments, and all of the various options around earn-out agreements. What are the kind of financial implications within those as well? And then just to wrap up the half day, I will look at alternative types of business structure, whether it's a merger, whether it's an acquisition, whether it's some form of joint venture arrangements, just so that we're aware how that might impact on how the deal needs to be put together. So it is a comprehensive guide. It is designed to be practical, and I really do hope that I'm able to welcome you on the course in the near future. Thank you.